You're listening to This Week in E-Commerce, the Ecom Nation podcast. Dive into the top online retail headlines with your hosts, Paul Waddy and Mal Chia. Let's load up the cart. Welcome, Paul.
Mal.
How are you?
This Week in E-Commerce.
This Week in E-Commerce, we are back for another week.
Yes, got to get that name out there. We're on Spotify now.
We are. Spotify, YouTube. Going to be uploading every episode there. So thank you. Well done to Sanchi as well, our producer and marketing guru, Sanchi at Ecom Nation, who has helped us get this podcast live on all the channels and soon to be Apple Podcast as well.
Yep, big thanks to Sanchi. It's coming along nicely. What started as a little Friday yarn and is really still a little Friday yarn.
Oh, that's right. That's right. Sometimes a Saturday, but generally Friday we try to aim it for. Yeah. Very good. Well, it's been another week. It's been another big week. Plenty of headlines this week. So I'm just, but how's your week? Before we do that, how has your week been, Paul?
Excellent. Very sad about the Matildas, who had a great run, which you watched with me over at my place, along with Andrew, our business partner. Yeah, I mean, bittersweet. They had such a great, inspiring, uplifting run, and then it sort of came to a halt. But that was a big highlight. Obviously, having the three co-founders of Ecom Nation together in one room is always a highlight. This week spent a bit of time with Budgie Smuggler and G'd Up and Mason de Sabre, and it was a great week. You were busy. How was your week?
It was great. It was great. It was good to be in Sydney yet again. Feel like I practically live there nowadays. It was a good week. Although don't forget there is one more game left for the Matildas. So tomorrow we have the third place face-off against Sweden.
Yeah, and that's the one we always wanted to win.
Yeah, that's right. This is a part of the strategy. No, it's been a really good week. I spoke at the customer show. So it was on a panel about storytelling, the importance of emotional storytelling in brand building, which was a really great session. So with panelists who I've never I didn't know them before. So Liam Lone-Lack from CMC Markets, ex My Muscle Chef, and Yvette Costi, the CMO at Bloom's the Chemist. So it was really great to be on there on a panel where unfortunately for the moderator, we kind of took things way off the rails very, very quickly. We went off script very, very fast, and it evolved or devolved, depending on your point of view, into a very lively discussion around storytelling and brand. It was a lot of fun.
Yeah, great. That would have been good.
Yeah. Speaking of good, some really big news, and our first story of the week is Zimmerman. The Australian fashion icon was recently sold, or a large stake in it sold, at a $450 million stake, sold for a valuation of $1.75 billion, which is amazing. This is our second $1 billion plus acquisition of an Australian brand, consumer brand this year, following Aesop, the start of the year to LVMH. So, and Paul, I think you've got a bit of experience and knowledge of Zimmerman.
Well, I remember there's a couple of guys I know that were at one point owners or stakeholders in Zimmerman. Don't know if they were still part of the current ownership group, but don't even know if I can say who they are. But a super impressive trio of people who invested in that business and some others, and they may have sold out a while ago. I'm not sure if they're still part of it. Might have even been years ago, but I do remember it doing very, very well. So Zimmerman, I think, has always had something special about it. It's a beautiful brand, firstly, but it's amongst the last decade of some pretty huge retailers not going so well. Zimmerman continues to just be this incredibly valuable asset. And, selling to, did you say that was sold to LVMH? No.
No. Aesop sold to LVMH.
Oh, Aesop, I was going to say. But yeah, anything that's getting that $1 billion valuation is just something that we should be proud of. That's an incredible result for whoever made all that money over there.
Yeah, absolutely. And also, and a fascinating story in that they come from very humble origins, from selling in Paddington markets. The old Paddy's markets, in the early 90s, and just really growing from there, which is phenomenal. which kind of just show that, not everyone has that overnight success story. It really does require that hard graft to be able to achieve this. It's not like it was an overnight success story. The Zimmerman sisters really worked at this,
Yep.
over decades, to build it to what it is now. Now they've got 58 stores worldwide, 22 in Australia, 22 in the US, including at some really, really well-known locations as well. I believe they actually have a store in Rodeo Drive. But really,
Wow.
that focus on quality, that focus on having that unique point of view in terms of like their swimwear and resort wear, well done to them. And it goes to show what the Australian fashion industry can achieve, being our first billion-dollar valuation. Sorry, our first billion-dollar fashion brand as well.
Well, reading some numbers. The group that acquired it value the brand at about 14 times its core profit, meaning $1.76 billion Australian. Its revenue is 260, and a more than 30% core profit margin. Now, I need some time to digest that. I don't know how that's even possible, but that's outstanding. And there you go. So all those people out there talking about valuations, there's some public data, 14 times core profit margin. I can't say I know what core profit margin is, Mal, but nonetheless, they've said that they're going to maintain the current management. And why wouldn't you? If you've operated that business so well, hats off to, as you say, those two girls and whoever else runs that business. That is incredible.
Yeah, certainly is. On the possibly less incredible side of things, there's a big shift we're also seeing as well in our second article of the week. This one is absolutely no surprises to anyone, but recently Nestle and Unilever are amongst many, many companies who've now publicly announced that they're going to be making a big shift away from to cut costs and making a big shift into generative AI, such as ChatGPT. This is obviously not a long time coming, and absolutely no surprises in the industry. But I'm seeing this continue to accelerate week by week, and even at the conference I was speaking at on Wednesday, the AI stage was packed. And I would like to say that the brand stage was also quite busy, but nowhere near as busy as the AI stage. Everyone is looking at this right now, and when you have all the biggest companies in the world trying to figure it out, it's almost this is going to happen sooner than later. People who are talking about like a 1 or 2 year horizon to figure it out, I think it's much faster. I think you're talking about a 6-month horizon.
I agree. I thought I would be one of those people that wouldn't touch it for 12 months until everybody else is, but you've shown me the light, and I got to say I'm using ChatGPT on a daily basis now, and had a Shopify playbook webinar with Nora this week where Kelly Slessor was talking about some really good practical ways that we can use it in terms of like not being lazy with our SEO and actually populating the SEO copy on the pages ourselves. I'm using it again thanks to your idea of dumping my video transcripts into ChatGPT and summarizing them into slides for my course and things like that. So it's inconceivable for me to think that people will need to get a bit sharper before they're replaced. They are at risk of being replaced by things like this. So I think you always say, find other things to be good at and find other areas to excel. But there's no question Shopify is working on Sidekick, which is going to be absolutely incredible. They've already got Shopify Magic writing some neat product descriptions. There's no doubt that AI is, it's funny because you always think about it from the front end, like improving conversion rate and guys like SearchSpring and machine learning there. But it's the back end that's so exciting, is automating some of these processes. And I'm really excited because one of the areas that online retailers struggle is inflated operating costs. And right now things are expensive to do. So if you can find efficiencies that mean outsourcing a little bit less or keeping your wage budget under control, I actually think there's immediate money to be saved using AI. So I'm pretty excited. I think it can, and it's pretty cheap to get involved. So I think that smart brands will be using this now to improve efficiencies and therefore reduce costs and therefore increase profits.
I see it's actually going to be leveling the playing field quite a lot. So when you consider the fact that, a lot of the skills which an AI can do better than a human, data analysis, copywriting, and can do faster as well, there's going to be a lot of efficiencies. So these are things which every brand can now perform at scale. Think about demand planning, demand forecasting, which is a very labor intensive job. Being able to put in all those inputs for 12, 24, 36 months worth of sales data and have all the variables in there, all the different color variants and all the different size variants, and being able to project out, okay, how much do I need to order of black?
That's
To
not
what
bad,
size
Mal.
curve?
That's not bad. I hadn't thought of that one.
That's one which has been on my mind for a little while, because I that's one of the things. Do I have to do that now?
I've sold
I've had
this
to do that
many.
a few times.
Well, think about the prompt. I've sold this many white t-shirts since launch on the 13th of August. I wish to maintain 3 months cover. I'm growing 5% a month. How many do I need to hold?
Exactly.
I like
Exactly.
it.
But now everyone can do that. So
Yep.
you got to think about as a retailer now, like as any brand, as we even the playing field with all of these things, and everyone has access to the same AI, the same technologies, the same capabilities. Where else can we then put our time and attention? We should be putting that back into the product, back into the
Yeah.
brand, back into the customer experience, because those other things become table stakes.
Mm. Yeah, they do become table stakes. And the first thing I thought of was what you said, which is product. And how can we make our products more interesting and more innovative? And I think it's the brands and businesses get caught up in fluff, like just caught up in things that really annoy me, like writing product descriptions. And it's like, I hate going on about this because I sound like, a Grinch, but these product descriptions that copywriters spend hours on. And it's like, just pump them out, have a look at what Amazon do, just informative, concise. As you showed me, it can actually learn tone of voice. It can sort of, learn to write the way Mal writes. So I think it's unstoppable. I think brands have just got to get on it. And I loved reference Kelly's tip yesterday again. Use it to populate SEO content. I actually started doing that immediately after she told me that. I went back to some of my blogs and started actually doing the SEO content that copy that, all of us just don't want to do.
Yeah. Well, there are obviously some ethical and legal concerns, particularly when you start using other people's likenesses. That's obviously something which is happening in the US right now with the Screen Actors Guild and the writers' strikes there, like AI being used to mimic other people's styles and other people's likenesses. So I think there are some minefields, I guess, to navigate with that. Like if you have one brand using another brand's IP in theirs, but it's generated by AI. I don't know, because yeah, what pushes the boundaries. So I think there is still some unexplored territory left to do, but I think we can still park that and let the lawyers figure that part out, because there is still so much other opportunity as well. And I find that some people I've been talking to are so focused on the negative and focused on the reasons not to do it rather than focusing on the reasons to do it and just to get stuck in.
Yeah, just give it a go. Let other people worry about that. And I think we should do a session on Shopify Sidekick when it comes out. So because I think that is going to be an absolute game changer. So we should dedicate a session to that, I think.
I smell another webinar coming up.
Oh, yeah. Good idea.
Yep. Now, our major topic, we talk about JB Hi-Fi a lot, and usually in the context of they're just an incredibly resilient business. Because of their amazing brand presence, and because of their positioning in the market, because of just their prevalence and everything, they've managed to be fairly resilient through the last 12 months. But in their latest earnings reports, as a group, they've now reporting a 4.3 increase in sales against a 3.7% decline in profits. But not just that, in their online division, online sales are down 21%.
I think we need their last 3 years financials to properly dissect this, because they went up like a rocket. So are they actually down, or are they, if you normalize that over 3 years, are they 5 years or whatever, are they still up? Because I mean, even if they came massively down from where they were, they're probably still in a pretty good spot, because everyone was buying TVs and soundbars and AirPods and whatever during COVID. But I think this part that strikes me there, Mal, is that sales were up and profits were down. And to me, that's downward pressure on margins, like that's discounting, and they do discount, like we know that. But why they were famous is that they were previously, and I don't know where they are now, but they were previously operating on 7% operating expenses. And so, for perspective, people out there probably listening would be spending 15 to 20% on marketing. They were running their whole business on 7%. Super lean model. So it would be interesting to see. We need their full financials, Mal.
They are a public company, so it's not too hard for us to find it.
So we should
Let me ask
look into that.
ChatGPT.
So it will be interesting to see if their operating expenses have gone up by a couple of percent, and that would be weird because what wages aren't growing. No, they are, but not hugely. Retail sector's not tremendously good on their award. But rents shouldn't be going up. In fact, I think we reported they're coming down.
They are coming down. Yeah, a lot of particularly like JB Hi-Fi are one of the anchor tenants anyway, so they'd be getting a very good deal on their rents.
Free, wouldn't they?
Yeah.
But I'd like to know if it's on their operating expenses, or I would say, is it on their margins where it's just margin squeeze, having to hold lots of stock and discount harder, and then as we should quote whoever we're reading here, Power Retail. Reports that the 0.8% contraction in retail sales. So for everyone. So reduction.
And a 3.1% decline in online sales.
Yeah, that's right. So there's a big decline there. So I think reading between the lines, but their sales are up, but it's just more competitive. Like we see it, Mal, there's a sale on every, I don't know, like every so often, and it does.
Well, it's Afterpay Day, so there's one going on right now.
But it does report there that their average basket is down as well, and so when your average basket's down, that could mean you're discounting more than normal. Not always, but that could be one thing. So it will be interesting to see if they're having to discount to get those higher sales. Publicly listed company, like continuous pressure to deliver on your earnings results, particularly on your sales. So I wonder if they're just kind of maybe discounting a bit more. I have no idea, but that their numbers are public. But so it's kind of like, yay, we grew sales, but we shrunk profits. So I would say that's a loss.
Yeah, well, also looking at Baby Bunting as well. Similar thing happened with Baby Bunting. They had a 50% decline, a 51% decrease in their net profit. So while total sales went up 1.7%, net profit was down 50%, 51%.
That's horrific.
Yeah. And I think part of that, like we talked about last week when we did talk about Baby Bunting in the marketplace, was that there has been a shift in terms of I believe anyway, there has been a shift in terms of people's approach to buying baby products, particularly like the larger, more expensive products. Like you don't necessarily need to buy like a new pram or a new cot. So maybe you're buying it on marketplace. So that could be detracting from that. But that is still just a horrific decrease in your net profit. But we're seeing that across all these large publicly listed companies. Temple & Webster, same thing as well. Kogan, same thing as well. Kogan reported, from memory, their net profit did stabilize. But what this all leads back down to is that we are just under so much discounting at the moment. Yeah, there's so much margin pressure, which we're doing to ourselves through discounting. Yes, wage costs, I believe, have gone up quite a bit. Just as cost of living has increased as well, and wages have gone up. That's understandable. But looking at it from a margin point of view, I think a lot of it is just due to the fact that we're just so aggressively discounting to clear stock. And now that demand has decreased as well, we're having to discount even more.
Yeah, we've got fixed costs. Most of these big businesses are not operating on Zimmerman type net profit margins, which I was Googling. It does appear that they were 30% net profit. So that just shows all those naysayers. You absolutely can make a 30% net profit in e-commerce or in retail. But a lot of these businesses are operating on tiny margins, Mal. So that means that you're barely breaking even. You've got massive fixed costs. Capital hasn't been that easy to get your hands on lately. So the sales, bringing cash through the door, really does matter just to keep going. We do see that. So you've got to bring the sales in. If they're slowing down, then you discount. And coming back to you, full circle to your point, the best way to not get caught in that rut is to have an innovative brand or product that you can't have 10 other browsers open just choosing the cheapest one. And I know how hard that is, but that's the dream. Create something that has that moat around it that is not comparable. Nobody compares, to quote a Shania. What is it?
Sinead O'Connor.
A Prince song, actually.
May she rest in peace.
Yes, exactly.
But it's about being distinct in market, actually having a unique point of view. Goes back to something which we've been talking about a lot as well. The world doesn't need another fast fashion brand.
Yeah.
So create a brand which someone actually does want and focus on who that is. If you are trying to be all things to all people, and look, JB Hi-Fi's model is to sell everything. They'll sell DVDs and Blu-rays and everything else, but no one's buying those physical media anymore. There's less and less physical media being sold. Matter of fact, like I gave away a whole bunch of DVDs, which was just taking up space. And I looked at them going like, yeah, there's some nostalgic value, but I'm never going to play a DVD or a CD again.
Yeah.
So why keep it? Yet that's taking up about half their stores. So they're having to pivot to selling more electronic goods, selling more computers, selling more speakers, selling more this, that, and the other. But the problem is the stuff people really, really want, the Apples of the world, have no discount. And you also make very little margin on those as well, because Apple doesn't need to sell it through you. You need Apple more than Apple needs you in those cases.
Although, as we've reported on Apple, even iPhone sales are declining. So, it's again, it's just a constant reminder for us to, if any, people still out there saying, "Is there a recession on?" It's shrinking. Retail is contracting ever so slightly, 0.8%. So spending is down, guys. So we've got to find ways to keep it up. And there's two things that I would hit home here, Mal, and that is one, okay, innovative product. Keep working on that. Have a product that can't be compared and simply you just can't get undercut. Like nobody wants to be a price leader. I hate that strategy. Leave that for Aldi, who's smashing it at the moment. But what the other thing is, just be responsible with your outgoings. Be really responsible with with your hires, your wage budget, your marketing budget, your tighten the belt, because you need that wiggle room now. If you're like, if retail contracts 1% and all of a sudden you're not profitable, you're spending too much running your business. You don't have to be JB Hi-Fi at 7% OPEX, but you should be under 30% of your revenue on your OPEX. So
yeah, absolutely. Look, I think there is no doubt that I think we're in a recession in everything but name. And thinking of that, like the companies which do the best during the recession do two things. They look at doing exactly what you were saying before. They look at actually reducing their costs. They're reducing the COGS. They're trying to improve the efficiencies there. They're trying to improve their margin position. Great. But what they're also doing, the great ones especially, are then reinvesting some of that back into market growth. Because as more people pull out of the market, what can you do to firm up your market? What can you do to further establish your position, as people actually start running a bit scared? And there's a lot of studies that have shown that the companies who actually do continue to invest in market growth through this period do come out of it stronger.
Spend in the right areas, I guess, is what you're saying then. Like you don't, and there is brands who will do exactly that. When the going gets tough, spend even more. But as you say, spend on your brand, spend on brand exposure, and pull back from other areas. And that's where, you keep an eye on probably your third biggest expense in your business is likely to be your freight. That's where you need to tidy that up, your headcount. That's where, your purchasing. So it's not, we don't really want to pull away from investing in brand. We just want to tighten up all the other areas of the business. And really e-commerce or business is simple. Like we've got to sell as much as we can and we've got to spend as little as we can to do it. But certainly we know that if we pull that away from reasonable performing marketing budgets, we will actually shrink our sales even further. So we want to lean up the business, but unless you're spending 30% on marketing, we don't want to take it from marketing. We want to keep the brand being built, but we want to tidy up the wages, tidy up the freight, tidy up all the loose ends. So that ultimately, again, a good lean business should be spending less than 30% of its revenue on its operating expenses.
Yep. Get fit, get lean, and bulk up on good marketing.
I like it.
And one final plug is that we will be doing a live webinar in a few weeks' time. So with the date TBC, we are going to be
how can they follow us on Ecom Nation on Instagram or Mal Chia or Paul Waddy e-commerce, and we're going to do a free webinar that's exactly on that topic, Mal. How much to spend? We might even do a bit of benchmarking. How much other people are spending out there. I'm sure that's a question that people want to know. What a ROAS is like these days. So we're going to really try and just give a lot of info in that session, I think, and it'll be a really good session. I'm excited. So you can register at ecomnation.com.au or just follow us on socials, and yeah, I think it'll be fun.
Yeah, the registration link will be up very, very soon.
Cool.
Thanks, Paul. Have a great weekend.
See you, Mal. You too.
See ya.